ECB Forum on Central Banking. Hi, I'm Ahura. I'm going to review the most important events of the week ahead. Stay with me. In the coming days of this week, we are not expecting to have many economic data, but it doesn't mean that it will be a light week. In the United States, durable goods orders, GDP, and personal income and spending will tell us about the healthy situation of the US economy. European also will host the ECB Forum on Central Banking, which can again turn the eyes on bankers' speeches. Number 1, US durable goods orders. Despite supply chain issue and more recent fears on the economic slowdown in the past months, durable goods orders could still stay strong and stable. Durable goods orders are a good measure for the real hope for the economic growth, and the number in these reports are expected to slow down a bit to confirm the weakness seen in other sections. The expected weakness is supposed to put a slight pressure on the US dollar. Number 2, US consumer confidence. With increasing inflation and continuing geopolitical concerns, consumer confidence and expected index both are expected to fall in May, respectively to their 16 months and 9 years low. Since in this current situation, lower numbers means that inflation will not increase more sharply, in incredible sound, estimated weaker numbers could help the stock markets to pause the bears or even increase. Number 3, ECB Forum on Central Banking. The ECB Forum on Central Banking is an annual event organized by European Central Bank in Central Portugal. It will be very important this week for the market participants as BOE Governor Bailey, Fitcher Powell, and ECB President Lagarde are due to participate in a panel decisions called Policy Panel. This meeting should give us a brighter idea of what central bankers are thinking about the global economy. Number 4, US personal income and spending. Different factors tell us we should not be optimistic about the estimated spending data. Retail sales fell in May for the first time in 6 months, and consumer sentiment slid to an 11-year low while inflation is still high. Therefore, expecting positive numbers is a little bit unrealistic. On the other hand, we expect a 0.1% decline in a real disposable personal income called RDPI after the May inflation increase. Both estimated numbers are worrying and would not help the US stock market sentiment. Number 5, Chinese PMI. With lifting the COVID-19 restrictions, PMI numbers are expected to increase and show the Chinese economy could be headed towards more normal growth trajectory in the second half of this year. Expected numbers are supposed to help the yuan become stronger against its rivals. This also can help the global economic sentiment as it can help solve some supply chain disruptions. More importantly, the service PMI is expected to rise from 47.8 in May to 50.1 in June to show that in line with manufacturing activities, the service sector also can help the GDP grow. Finally, number 6, European inflation. Since gas and oil prices have been printing new records in June, price pressure can continue in Eurozone to push the European Central Bank to act faster against inflation, otherwise it could be late. After increasing inflation in May by 8.1%, we expect to see even more increase in July by 8.3%. With estimated numbers, we expect the ECB to begin the rate hike cycle at its July monetary policy meeting with at least a 25 basis point increase in a deposit rates, which are supposed to be a positive for the common currency. Thanks for watching this video and hope it's going to be an amazing week for you.